So, I want to talk about something that I think is super important as far as your tax liability and just as a whole with business owners, real estate investors, content creators, gig workers, 1099, all my non wage earners. So, what's not happening is most of you don't keep your tax returns on your computer, right? Your tax preparer files it. You just want your refund check. That's what you're waiting for, and you don't actually care about keeping a copy of your return. I get it. You can get a copy of your paper return, but please just have it on your computer. So, what I would like for everybody to do, because I believe probably billions of dollars are lost to the government because one, when you're preparing your returns, and a lot of times your preparers are preparing your returns, they're not looking at your prior year return to carry forward your losses. When you're in software, so for example, TurboTax, or maybe your preparer, they use a professional software. The software doesn't carry forward your losses. You have to actually go in and plug in any losses. So, for instance, your qualified business income loss carry forward, that's on Form 8995, line, I believe, 16. You have to look at what is able to carry forward to the next year. And then you have to take that number and plug it into your current year return. And if you don't, the return won't accumulate your losses. Okay, a lot of you are making income and it's taxable, but you're not carrying forward your losses from the prior year that you can to offset the current year's income. Okay, the same thing goes for your Schedule E with your real estate. You're not carrying forward your active, your at-risk losses, which is basically anything that's active in real estate, or your passive losses that you get to carry forward, which are non-at-risk losses, right? And it's important to carry forward both, whether it's active or not active, because if you do become active, those losses can offset your tax liability. So if you have a bunch of passive losses that are being carried forward and they accumulate, and let's say the next year you meet real estate professional status, you can then use those losses to offset your regular income, like your, maybe your W-2, business income, all that other stuff, because now it's active. So to those of you who are, getting your tax returns done, your business owners, and I know a lot of you don't really want to be bothered, you don't care, but you're losing a lot of money in tax dollars. A lot of you are paying a lot more money in taxes than you need to, particularly self-employment tax. If you're not an S corp, you might want to check your prior year return and look at any losses you get to carry forward, whether it's your Schedule E or it's your your Form 8995, your, qualified business income loss carry forward, or the like, right? This is just, and there's a lot of other forms, but those are the two main ones. And, if you're paying a lot of tax, just do yourself a favor, go back to your prior year return and check and see if those losses are being carried forward to offset your current year tax liability. And even go back another 2, 3 years and just make sure they're accumulating. Because if you're not accumulating, you're losing like a lot of money. I mean, it could be tens of thousands to hundreds of thousands of dollars. So just know that if you're preparing a return, and a lot of times if you're a tax preparer, they're not, and a lot of times they're just plugging numbers in. They want to get you in and out. They want their, fee, and that's it. If they're not actually carrying the losses forward manually, you're losing out because software doesn't pick up on your prior year losses. You have to actually plug it in. All right.